Live from Houston, Texas, the humidity capital of the world, it's time for Money for Lunch, where we feed your brain and your business with supersized portions of business and financial news. Now your host, Bert Martinez.
Next up, we'll be talking with Allan Peiser for dessert, so stick around, and we will be right back after this short break. Welcome back to Money for Lunch. I am your guest host, Catherine Lee, and for dessert, last but not least, we will be talking with Allan Peiser. Allan Peiser is a CPA and managing partner of Goldin Peiser Peiser, which is an accounting and consulting firm. They specialize in tax and business advice to small and mid-sized businesses. Welcome to the program, Allan.
Thank you.
Thank you for being here. Today we're going to be talking about very important topics, Medicare tax and preparing for the uncertain tax changes. Allan, please explain reasoning behind the Medicare tax.
Well, as part of the Affordable Care Act, which was otherwise known as the Obamacare, there were several new provisions enacted to help fund for the additional costs of the new health insurance programs. And more specifically, the law is going to expand the taxability of certain kinds of income in the form of an additional Medicare tax. And the tax is really going to be assessed on two buckets of income. One is on to the extent that you have investment income, where the rest of your income exceeds a certain threshold, and the other is where they're going to start taxing some of your income from your passive investments.
Okay, so what is the tax on self-employed income?
Well, self-employment income is if you work in a business and you really, it's your Social Security and Medicare taxes that are assessed upon your earned income. There's income. The tax law looks at income in three different buckets. The first bucket is sort of income earned off the sweat of your brow, which is really otherwise known as self-employment income. And then you have investment income and then income from passive sources. So self-employment income is the taxes that are withheld out of your paycheck if you're a W-2 employee, or the taxes assessed on you if you work in an unincorporated business.
Okay, and what is the tax on net investment income?
Well, this is a new concept that's going to come into play for investment income or for income starting in 2013. So what the law is going to do is there's going to be a surtax, a 3.8% surtax on net investment income. And net investment income is defined as being income from interest, income from dividends, income from annuities, income from royalties, income from rents, and income from passive income sources. And the tax will only come into play if your adjusted income exceeds $250,000.
Okay, gotcha. Yeah. Okay. And we are starting to touch on this a little bit, but what are some other possible tax changes in 2013 that we can look out for?
Well, we're dealing in a very strange area in the tax world in the sense we have a lot of uncertainty because of all the volatility in our political markets. And absent action from the Congress, there's going to be significant changes in tax rates, which are enacted in the code. If Congress does not act, the tax rates were going to go up significantly. You know, the highest tax rates could go from 36 to 39.6, and there'll be some gradual bracket creep across the board. So that's really on the income tax side, but there's some very significant changes on the estate and gift side, which we can talk about if you'd like to.
Okay, yeah, please discuss that. What are some suggested tax strategies for some of these uncertainties and changes?
Well, it's very hard to plan against the income tax changes because of the uncertainty. But generically, what you would look at in an environment where there's going to be higher tax rates in the future, then your tax planning strategies would revolve around accelerating income, bringing more income into 2012, and deferring or pushing your deductions into the future. Because if you bring income into this year, you're almost assured to be taxed at a lower rate than you will be taxed in the future. And the deductions, conversely, will be worth more in the future than they are currently. So it's kind of counterintuitive from normal tax planning strategies, but it's also in this uncertain environment. In the estate tax arena, the estate tax works in tandem with the gift tax. So under the current environment, if you have an estate of $5,120,000 or less, you will owe no estate tax should you pass away in 2012. There's a link with that estate tax. You can gift away as much as $5,120,000 in the current year and escape a gift tax. The gift tax is assessed upon the donor, the one giving away the money. Those two amounts are scheduled to reduce to $1 million into an estate tax exclusion and $1 million into a gift tax exclusion starting on 1/1/13. So some of the strategies that we've been engaging in with our clients is a strategy to use up your entire gift tax exclusion currently, thereby locking in the estate tax exclusion amounts for the future.
Excellent. Okay, those are good tax strategies. What is the Affordable Care Act? Can you explain that to our listeners?
Well, the Affordable Care Act is otherwise known as the Obamacare. That's sort of the generic name. So it encompasses a whole broad range of issues, not necessarily inclusive in the tax arena, but in the tax arena, the tax implications of the Obamacare or the Affordable Care Act include this new 3.8% tax on net investment income to the extent your income is greater than $250, and also an additional 0.9% tax on earned income, self-employment income, to the extent that your self-employment or your salary income is greater than $250 as well. So those are the implications for the taxpayer. There are some other implications for business in terms of additional reporting requirements on salary information. You're supposed to report what the cost of health insurance is being provided by the employer on the salaries, on the W-2, and there's some other reporting requirements which are going to impose additional administrative burdens on businesses.
Okay, great. Thank you so much for that overview of the Affordable Care Act, just to sum everything up for our listeners. Why are these issues important to our listeners, and what can they do to control their finances in their own lives in terms of these changes as well as in the Medicare tax?
Well, the single biggest issue that they can think about is the structure in which, or the composition of their investments. So, for instance, if you've got there's two conditions. One is you have to have adjusted gross income, or an income level of greater than $250,000, and then you've got to look at the composition of that income. If your income is largely coming from investments, or even at the marginally comes from investments, then you've got to look at how you're holding those investments. So if you own stocks paying dividends and your income is in excess of $250,000, you're going to be paying 3.9% tax on those dividends. So you've got to look at how you hold those investments. There is some thought that if you shifted away from dividend-paying stocks or interest-bearing instruments into tax-exempt instruments like municipal bonds, municipal bond interest will not be taxed. It will not attract the Medicare tax. So you want to look at the composition of your investments.
Okay. Look at the composition of your investments. Gotcha. Allan, we're running out of time here today, but thank you so much for discussing all these important issues and topics regarding taxes with us. How can people find more information about you?
We're located in Dallas, Texas. We have a very sophisticated website that has a lot of information about us. We're at www.gppcpa.com, and we're always available to speak to people on an ad hoc basis if they should call in, and our main number is.
Thank you so much for joining us today, Allan. We're running out of time, but thank you for joining us, and have a wonderful weekend.
Tune in Monday through Friday here on Money for Lunch, and check out our website at moneyforlunch.com.